Right then, less than 30 minutes to go, so I'll try and make this brief and cover as many as the popular assets as I can, starting with oil. Oil, just using the trend predator indicator, which I use for my own approach, we can see that we've got an immediate bias on the chart daily that's a fake out high, which means we took out yesterday's high. In fact, we took out the previous week's closing price as well, and we've come back inside. So if we try and make that a bit clearer, this is a 15-minute chart. So there is the high of yesterday. We'll just zoom right in and we'll use the levels and trust that the indicator is telling us the right information. So we've got the previous week high, the previous week's close, the previous day's high. We took out the high, that's bearish because we took it out and came back inside. So we're back inside of the range from yesterday, and that is bearish. On the other hand, if we were to get back above the high, then we're targeting the previous week's high at least. The weekly chart is bullish. The daily chart is mixed because we've had a fake out low, i.e. we took out the Monday low and we moved back inside today. So we took out the low on Tuesday, we moved back inside. We've got now a peak formation low, a peak formation high. So the market is coiled between the low and the high. Now, of this week, the weekly bias is bullish. So for me, what I'd like to see is the price back above yesterday's high for a continuation trade up through the high of the previous week. On the other hand, if we were to break below Monday's low, then that would be bearish. We'd have to consider the previous day's closing price for a clear run thereafter down to the previous day low. Looking at silver, silver is giving us a condition today where we've taken out yesterday's low and we've come back inside. That is bullish, but we're still below the previous week's low. The weekly chart is bearish. The daily chart is currently somewhat bullish, but if we break back below the low, then that would have the weekly chart and the daily chart aligned for a downside continuation trade into potentially the previous week's low over here. This would also give us a scenario whereby we are taking out the previous, bear with me, the previous month's low, okay? And that will give us a bearish condition on the chart to go down to the previous month's low. So mixed bias on silver. If a gun to my head, I'd be looking for the breakdown of yesterday's low for a continuation trade lower. That would be my preference. On the other hand, if we get back above the previous week's low, then that's bullish. So line in the sand is yesterday's low and the previous week's low as for bullish trades, below yesterday's low, bearish trades. So bullish above 30, call it 30.30 according to this broker, silver, and bearish below 30, call it 15, silver according to this broker, which is Capital. Gold, we already talked about gold earlier in the day, calling it from the closing price and then breaking below the daily breakdown level from Monday. That's bearish. So at the moment, we are aligned bearish, but we do need to get back below the London low over here. And then the previous day low down to the previous week's low. That would be my preferred scenario. To the upside, we need to get back above Monday's low and then clear through all of this congestion, which is essentially the highs of the day, for a continuation trade up to the previous day high as an upside target. Looking at the indexes, US 30 now, starting with the US 30, we are Inside of yesterday's high and low, we've got the daily breakdown level from Monday. So below that level, we're bearish, and we're looking for 3 levels of rise and the sell-off to take out the closing price and then yesterday's low. So currently I am overall bearish on the US 30. We need to break this trend, which is bullish, but it's a mini bullish trend in an overall bearish market. Having said that, I don't really want to be selling into a peak formation low. So the clearer trade opportunity would be below yesterday's low, but there is an opportunity to be taking the trade from essentially below the peak formation high that we've put in today. Okay, so below the high, accepted inside of yesterday's value area high over here, so 43.50.60 according to this broker, to give us prospects of a move down into the closing price, and caution running it through into the previous day low, because we've already seen a peak formation low here, which is pumping up. But the bias overall, according to the weekly and daily chart, is bearish. On the other hand, if we break back above Monday's low and then through this congestion of the previous week's low, the previous day high, the previous week closing price, and then bullish above through that level. So a lot of support, a lot of resistance in the way, not an easy instrument to be trading, not the best engineered chart. I would say same would go for somewhat for the US 500. We've had a fake out low below Monday's low. Okay, so this here is support below the previous week's closing price over here. So we're bullish above that, bullish above the previous the Monday low for an upside trade back in towards the previous day's high. But we're mid-range. We're right in the middle of last week's range. So again, not an easy instrument to be trading. The US 100, we've taken out the lows of yesterday's inside day. So I'm looking for a continuation back up into the previous day's high. That's an inside day, signal day. We trade from the level, the low or the high. So we're inside of it. Again, not an easy scenario, but the bias is bullish. You've got the previous day closing price. You've got a peak formation low here. New York's put in a low as well. So we're bullish above that low, essentially bullish above the previous day closing price for a continuation up to the previous day high. Looking at the euro is giving us a fake out low on the day. Somewhat, well, it is lining up with the weekly bullish bias. We've had a fake out low of the previous week over here. So we've got a peak formation low down here. All right, we've come down to retest it. We've found buyers. Buyers are pushing the price back up to the previous day closing price. We've got the previous week closing price to get through. That would be our barrier on the way back up into the previous day's high. And let's look at dollar CAD. Dollar CAD is bullish across the board. We've taken out yesterday's high. We're in breakout from the previous week high. So everything is all aligned bullish on dollar CAD for the moment. It would stay bullish so long as we stay above the previous day high. Expect volatility throughout the Fed, so it's going to be a hard one to call as well. But bullish above the previous day high and the previous day closing price. So we'll just wrap all this up as potential support to go in line, potentially in line with the breakout of last week's range, aligned with the breakout of the monthly chart as well. There's the previous month high over here, the November high. So we've broken the November high. We did that last week, and then we've broken last week's high this week. We've broken yesterday's high, so we're bullish as well for dollar CAD. Looking at the Dixie overall, DXY, dollar index. Dollar index, we're breaking out of yesterday's high. We've taken on the previous week's high. We've taken it out and pulled back inside, which is bearish on the US dollar at the moment. We've come back inside of yesterday's high as well. So selling off into what could be a bearish scenario, taking on this trend line, close below the previous week close on a 15-minute basis would be sufficient to target the previous day low, which throws a spanner in the works then for anything really that's negatively correlated to the US dollar. So, for instance, we looked at dollar CAD a moment ago. We're expecting an upside continuation, but if the dollar is strengthening, sorry, no, that's correct. Yeah, the dollar CAD. So, indeed, so if the US dollar DXY is weakening, then that's going to be a hard trade to take long, isn't it? So, bear that in mind as well. It's conflicting. So, pretty much mixed messages across the board. I would advocate letting the event play out before making trading decisions. I personally don't trade the Fed. I don't know how to. I don't have a strategy for that. In fact, I don't trade on Fed days. It's too erratic for me. I'm looking for momentum, directional momentum coming out of an event. So looking for setups beyond the event. Being patient, sitting on hands and waiting for tomorrow. That's not to say you can't find setups on the back of the Fed today, but it's late in the day for me. But there may be something set up for the Asian, London, and US session tomorrow on the back of the outcome today and how the market sets up in terms of momentum and direction across the board. All right, so enjoy the event and good luck.